Firstly, may I have the pleasure of inviting the partner, Apollo Global Management, Mr. Nipun Sahni, please. So yes, ladies and gentlemen, we are gearing up for our first panel. And you do not want to miss this one, of course, because it's chaired by Builder Extraordinaire, Dr. Niranjan, Hiranandani, and of course, moderated by Mr. Amit Goenka. So once again, I'd like to invite the panelists. Can we have a huge round of applause for the partner, Apollo Global Management, Mr. Nipun Sahni. Welcome, sir. I'd also like to invite the head residential financing from Brookfield, Mr. Dev Santani, to please come join us on the panel. Also taking the pleasure to invite partner Actis Advisors Private Limited, Mr. Ashish Singh, to please come join us. Yes, indeed, we've got a heavy-duty panel, so please do not miss this. Absolutely engaging indeed. I'd now like to invite on the dais the CEO, India Operations and Private Funds, Ascendas, Singbridge. Can we have Mr. Vinamra Srivastava to please join us? Welcome, sir. Calling on the Managing Director of Varde Partners, Mr. Vishal Kumar, to please come join us. And our final panelist for this absolutely engaging and mesmerizing session is the Managing Director for Poddar Housing, Mr. Rohit Poddar, to kindly come up on the dais. And meanwhile, requesting all these lovely people who have joined us this morning to kindly settle down. We would be announcing a tea break in a while, so kindly bear with us. This session So yes, once again, a very, very engaging session on its way. Just a few minutes, we're going to start off this session called Lessons Learned and the Way Ahead for the Indian Realty Investor Outlook, Renewed Investment Frontier. Meanwhile, once again, a very, very warm welcome to all these lovely people who've joined us here for the Real Estate and Infrastructure Investor Summit 2018. Yes, we've got some heavy-duty names, people coming from different sectors, from the real estate and infrastructure sector. And yes, it's indeed going to be a very, very engaging session, chaired by Dr. Niranjan Hiranandani and moderated by Mr. Amit Goenka, and some wonderful panelists sharing in their point of views for the next session.
Well, thank you very much, Junaid, and welcome everybody. It is an extraordinary delight and joy to present the inaugural, after the absolutely spectacular inaugural where we had some really profound thoughts being shared, to now introduce an even more spectacular panel this morning, which is really talking about our theme today, the renewed investment destination India, and the interest that global investors are showing towards the Indian opportunity. I would like to start by, in particular order, introducing the panelists from my right. Mr. Nipun Sahni, country head for Apollo. Nipun is no stranger to India real estate, having spent over nearly 2 decades investing in India across platforms, across asset classes, and today is one of the leading private equity investors in India real estate. Joined on his right is Mr. Vishal Kumar. Vishal Kumar again has an extraordinary and prolific profile, having invested billions of dollars in India real estate across over a decade, and now as Varde Partners, as the country head of Varde Partners, brings an extraordinary insight into resolving stressed assets to investing into new opportunities. So welcome, Vishal. Um, Dr. Hiranandani obviously needs, again, no introduction. Our leader, our mentor to the industry, to everyone here. And he will be, he already shared the reasons why global investors are coming and will continue to come. And we will delve further into his thoughts and insights as to what will make India shining again, what will make India the pinnacle of the global real estate story. To his right, Mr. Dev Santani is the head of residential at Brookfield. Brookfield, again, is no stranger to all of us here, being one of the largest global investors in India across various asset classes, and Dev heads their residential practice in India. Thank you, Dev. To his right is Mr. Vinamra Srivastava from Ascendas, Singbridge. Ascendas, again, has been in India for a very long period of time. Under Vinamra's leadership, we're seeing renewed interest, a spate of commercial acquisitions and development capital going into developing new asset classes, new assets in India. So thank you for joining, Vinamra. To his right is Mr. Ashish Singh, country head for Actis. Ashish, again, is a veteran who's been, I think, on all sides of the table of real estate, as a developer, as a financer, as a private equity guy, as an advisor to the industry. And we're very excited to have Ashish on our panel today. Thank you, Ashish, for joining. And last but not the least, we have Rohit. Rohit from Poddar Housing is again been leading the affordable housing space with a magnitude of developments and townships in the western region, including Mumbai and Pune, and has been on a flurry of projects and development and exploiting new opportunities, including the warehousing space. So we'll be keen to hear from you as well, Rohit. So thank you, everybody, for, again, joining this extraordinary panel. And getting right off the bat, we'd like to ask each one of us here, starting from Rohit, as to why now? What is causing India to be the new development opportunity? What is causing your company and your enterprise the excitement and energy to go out and build more when people believe or had believed last year that there may be a lot of pain left to come before the emergence starts again?
Amit, thank you very much. I think the the pain on regulations by and large over. RERA's played out, and the PMAY scheme is really here to stay. The PMAY scheme is really driving our projects going forward in and around Mumbai and Pune. So I think that for Poddar housing, affordable housing has really been what we've been doing for the last 8-9 years. And that's really our forte and our way forward. So I would say that the PMAY scheme in particular and other affordable housing schemes, which are now easily available for all developers to do, is basically the way forward. Because it's transparent, approvals are single window clearance through the, in our case, Mahada. Investors are looking at it very seriously. HDFC have raised over $1 billion affordable housing fund, and they are actively investing in the affordable housing space with other capital partners. Sales is not a problem if you're a brand. And as long as the execution is in good shape, and you're able to use technologies for construction that enable you to deliver on time and on budget, the future looks bright.
Thank you. Coming to you, Ashish, Actis has come back in the country in a big way. You're leading the brigade. What is it that is exciting you most about the opportunity set today amongst the various opportunities, whether across asset classes or because of the emergence of distressed opportunities, or where do you think the next big bang for you will be?
Sure. I think global capital will follow growth, and India being a strong growth market, there's no doubt in my mind that that makes it very attractive for global capital. Different industries or different property types will at any point of time be in different phases of their cycles. So we know that residential has been underperforming last many years. But then I also believe that a recovery should start setting in at some point of time, not not too far in the future, given the fact that urban job creation has been very high, leading indicator of which is office absorption, which has been very robust last 5 or 6 years. And in office itself, the demand has been predominantly from businesses that have a global connect, and perhaps Indian domestic businesses have not been firing as the investment cycle begins in domestic businesses as well. That will give another boost to the office sector and hopefully will either keep the demand robust or fill in for any sort of cyclical correction in the demand from offshoring or tech-related businesses. And I think that we are all aware about, we keep reading about so much interest in warehousing, what GST does as a very, very disruptive yet very, very positive step from regulatory perspective. And I think that the biggest difference that I see today vis-a-vis 10 years ago is, I think, number one, everybody is wiser, from investors to developers to consultants to contractors, etc. And everybody realizes the challenge and importance of execution. The second is, I think also from a regulatory and transparency perspective, there is no doubt in anybody's mind that the sector is now looking forward and it has made several leaps compared to where it was 10 years. So that prepares the sector better for depth and width in the market, and that resonates with the investors as well. There are short-term pitfalls or challenges potentially on the, for example, currency front or on the where the sort of pricing of capital may be. But I see those as only short-term pains as we go through. But the single most important factor remains the growth and the underlying demand that it creates for real estate.
Vinamra, what's making Ascendas put more capital, and what's your strategy?
Yeah, I think there's no doubt that we are extremely excited by what's happening in India right now. And it's actually quite simple. It's a function of demand supply. Demand has grown robustly. Bangalore recently was the most attractive tech operation destination in APAC, beating the likes of Singapore and the Chinese cities. So the entire macroeconomic situation is really favoring increasing demand. And on the supply side, what has happened is that because ease of operations, regulatory improvements, infrastructure, all of that has become much more favorable. So you see more and more institutional capital pouring in. So the sector has really professionalized over the last 10 years. And there's a cyclical chain, because when professionalism comes into the sector, that gives a lot of confidence to the customers as well. And then the demand also keeps increasing. So both of these keep feeding each other. And that's what we are witnessing. And the second interesting aspect is the fact that while traditional commercial office took its own 10, 15, 20 years to really come to the stage where it is now, what's happening with that learning benefit is that the emerging sectors like co-working or grade A warehousing or data centers, those are actually rapidly growing at a much faster rate because of the learnings in all the other sectors. And I see that being a game changer in the way the whole sector evolves in the next few years. So rightly said by Ashish, the currency depreciation, oil price hike, those are, I think, short-term challenges. But if you are an investor for the long term, and I believe for any foreign investors, actually forget real estate, in any other sector, foreign investors and operators in India need to give themselves a good 5 to 10 years to learn how the business works. But once you have gotten over that period, you then start enjoying the benefits. So that's where all the foreign investors are in India with respect to real estate. And I can only see all of us going north from here.
Dave, Brookfield is no stranger to any of us, the way it has pumped billions of dollars across asset classes. What's your strategy and why now, especially that you lead residential? And there was a thought that Ashish mentioned that there's still pain in the residential markets. What is Brookfield thinking?
So Brookfield, we entered India 2014 and we've scaled up to about $5 billion now. And what excited us then is pretty much continues to excite us now. what we saw is that from a macro perspective, there are a lot of positives. So the country is growing very strongly. The population is in its benefit, and both residential and office have very strong fundamental demand, which is all ingrown. We are not waiting for foreign capital or foreign residents to move in for the underlying demand. We are also contrarian and more special sits, so we tend to see opportunity when there's dislocation of capital, when there's distress of some kind. And clearly now, given what's happening in the banking sector, there is a huge shortage of capital for real estate. And that's where, whether it's high yield credit, whether it's pure equity chasing office, there's a real need for capital, given that the banks are not able to step up and provide capital with all of what's going on in the banking sector. Residential specifically, actually, we are planning to scale up our book pretty significantly. And that comes from the fact that our sense is that the sector saw a lot of regulatory changes with GST, with RERA, with demonetization, which sort of crippled it for a while. Now that all of that has evened out, now that there's a lot more customer confidence returning, we think if we take long-term bets between 5 to 6 years, there will definitely be an improvement, both in terms of volumes and some of it in pricing. B, it's also made sure that a lot of smaller players are effectively getting edged out of the market, which from an investor perspective means we have a consolidation happening, and if we back the right partners and we get our titles and our locations and all the basics right, there we should see strong returns.
Thank you. Dr. Hiranandani, you alluded to the fact that legal reforms and legal activism has espoused tremendous confidence and will continue to espouse tremendous confidence. You've obviously seen the spate of capital that has come into the country in the last 12 to 24 months. What other drivers do you think, from a developer's perspective, as well as from your national vision, do you think will continue to drive India's story? Or are there hiccups or speed breakers that you envisage may interrupt the story?
I think the future, as they pointed out already from the investor's perspective, is actually absolutely perfect. I think the long-term growth is there. Demand is tremendous. It's unbelievable, the kind of size of demand. But I think most of us have really missed the bus in terms of actually not understanding where the demand is and the kind of demand that really needs to be backed up. And I think that change has already taken place. Hence, consolidation is taking place, and I don't think there's any alternative to that. Having seen that, I think that's an opportunity in terms of investment opportunities in this country. And second, I don't see any other country in the world where the growth story is going to be as strong in the next 5 years. So we are in the right business. However, we have to work correctly. I think the environment in terms of regulatory is there already in place. So a combination of these two things really should see a win-win in the investment market, as he's talking about. Brookfield, of course, has been my biggest investor. So thank you very much for doing it, and please continue to do that, both with me and the rest of the country. So most welcome. The idea basically being is that I think this opportunity is not going to be forever, but I think the opportunity is actually now. So this is what I see, that those people who would be contrarian, as you said, comes into the market at this point of time when the market is just beginning to take off again. I think the entry point should be today.
Thank you. Vishal, you've seen everything in real estate investments: greenfield, brownfield, commercial, retail. As Varde, what is it that excites you? What is your strategy?
So it's a bit of what everybody said. I think primarily the macros from a relative perspective in other countries of the world, they still look good. Our demographics in the long run are very strong. So demographics plus urbanization is what I think kind of drives real estate values, and that's, I think, so that we see a long-term uptrend, and of course we see some down cycles in the middle. So, at least I believe that we are in the midst of one right now, especially as far as residential is concerned. So that, I think that's the macro piece. Plus there's structural and regulatory changes, mostly from the bankruptcy court perspective as well as from RERA. I think that's resulting in a lot of realism in both in the heads and minds of developers, capital providers, banks, investors, which is always good. Um, then there are structural changes, which is basically a GST, which is causing a shift in the warehousing portfolio of all the large distributors. So I think these 3-4 things are kind of causing a dislocation in various parts of the real estate economy, and we think that there might be opportunities to buy some, to get some value plays, to partner with some good people and prep ourselves for the long run. So that's the basic strategy. Basically, take advantage of the dislocations that are taking place, find a few good partners across asset classes, and build a portfolio which will capitalize on the long-term positive trend in the Indian economy and especially in Indian real estate.
Thank you. Nipun, again, you are a veteran, having invested again across the country, across asset classes. We've seen you as Apollo as well come out and blaze the trail with multi-million-dollar transactions and deals. What is your outlook going forward? Is India truly a renewed investment frontier?
I see that in India, the next decade and the previous decade, you're going to see a full life cycle come back. In the last 10 years, you went from probably 500 developers to 5,000 developers. And I think in the next 10 years, you're going to go back to 500 developers. So I think consolidation has not been witnessed in this sector at the scale at which it is coming. Everybody who was in different industries, from textile exporters to industries in commodities to media companies, I think everybody and their uncles got into this industry without really realizing what it takes to last long in this industry. There were projects in Mumbai. A single project was making more money than that industrial house had made in the 10, 20 years of their existence. And hence the desire to be part of this sector was very, very high, pan-India, amongst the bigger cities. But I think everybody has realized, or many amongst them have realized, that this is not a cup of tea for everybody. This is a very deadly cocktail. It has to be handled very carefully, and you can get drunk very, very quickly. And I think that is what is happening. And in the next few years, I think the industry is going to shrink in terms of number of players at a pace that I don't think this industry is going to just totally be a very different industry if we are sitting here 5 to 10 years from now. The inequality that we talk about as a country for this sector is going to increase. The inequality amongst the big players and the smaller players, the gap is only going to get wider. Because all these funds that you see on the dais and many more are backing the larger players. The larger players do have a genuine advantage, a competitive advantage over many smaller players. Access to capital, access to land, access to talent. I think all of that is going to make some of the larger players really, really large. So I think people have to take their calls, and those who are sitting on the sidelines, not trying to align with capital or trying to do with small capital, you have to rethink how they want to align with global capital. Because India does not have the capital to finance itself. And the joker in the pack is oil. If oil remains where it is for the next 1 to 2 years, you could be staring at a rupee, which is going to burn a lot of holes in this pockets and people in this room. Our deficit on oil alone is $5 billion a month. No amount of FDI can bridge that. So while India has a great story, long term, I think India has all the kind of indicators of long-term growth and GDP. I don't think that's going away. But the wings are getting clipped. And by clip, there are 4 factors. C is your currency. Global investors look at dollar returns also, not just rupee returns. So you're going to see a currency which is depreciating pretty rapidly, and I think C is currency, L is liquidity. I think domestic liquidity is going to get sucked up at least in the short term, till the government and RBI figure out a way to resolve, at least 15 to 20 billion dollars of liquidity that the system needs on an immediate basis, so that crises like ILFS don't snowball into a Lehman moment for India. The third is interest rates. I think we've had Goldilocks days over the last few years. Not so hot, not so cold. But I think going forward, interest rates are only going one way, globally and in India. And that's going to increase, have a cascading effect for developers, economy, and the investors' return expectations. And the last one, which we've had it just too good for the last few years, so we've forgotten, is politics. And that's coming up in the next 6 to 9 months. So I think you add up all these four, it's great, demographics and all of that, but I think in the next 6 to 12 months, there's some turbulence. So as investors, I think we are pricing risk. I think India risk has gone up. So I think it is going to offer great opportunities. The consolidation which is coming up in India is going to be needing more capital than the country has ever needed, because a lot of projects are going to change hands. We've already seen that in the office market, where in the last 5 years alone, 40% of Indian real estate is owned by foreign owners and foreign capital. That's not yet happened on the residential side, but I think you're going to see a lot of realignment of capital. And the two big themes which are playing out is going to be both consolidation capital and distress capital. So I think those are what we'll also be focused on. Thanks.
Thank you. I think you're leading us, Nipun. Well, thank you. I think you put us spot on into what we really need to understand a little better from a global perspective, given that we have basically global LPs today on this panel, is the macro issues. You talked about oil, you talked about currency. There is a fear of interest rate regime also going up. There is a fear of fiscal deficit going up. Coming back to you, Vishal, what do you think the global LPs are thinking? Opportunities are undeniable, we mentioned that. How is India being seen from a global perspective, given the macros that we're going through? And what is it that you're preparing to do to tackle them?
Well, relatively, interest rates are going up across the world. I don't think India is an outlier in that respect. We probably started before everybody else, which is a good thing. So I mean, that's a concern, but that mostly results in things like worrying about currency depreciation and inflation. And that's, somebody like us at least always factors that in as probably the second biggest risk. And it's, the forward curve gets priced into the model, and we know what our dollar returns are going to look like. So everybody worries about it, but we don't think that India is away from the world on that perspective. Oil is affecting both positively and negatively all countries across the world. I know it affects India more than other countries that we know of, but again, in the end, it results in the same thing, basically inflation and currency, which are kind of factored into the projection. So at least I would assume that when going in, we would at least assume that the current trend will to some extent continue for the near future. I think the good parts, where India kind of stands out from even countries like China, one is demographics, where basically we are seeing that the working age population in India is going to grow faster, and India is going to have the largest working age population across the world for several years, starting 2025, I think, if I'm not mistaken. We believe that the government, both the current as well as the future government, has had the quality of governance in the country has improved somewhat over the last 10, 15 years, and I think at least that trend should continue. A lot of the structural reforms which India has started now have already obviously seen good results in other countries. So from that perspective, at least we see that it should move in the right direction. Other things, I mean, if you think about other global macro factors, Europe is still struggling. The US is doing very well, but everybody is worried that it is going to go into another slowdown after some time as the effect of the tax cuts as well as the interest rate changes take place. Rest of Southeast Asia, including Japan and China, are they've also seen a little bit of a peak because of all the quantitative easing, and as that kind of reverses, we see that changing. I think the only one factor that worries us and probably everybody else is the fear of capital flight out of India as interest rates go up across the world, and investors realign their risk and return strategies. But I think, and that's where probably the few things where India needs to change will stand out, and one, probably the most important, is the quality of governance. If the current trend of good quality governance continues, I think that India has a good opportunity to kind of capitalize on and be a little bit of an outlier across the world, and and grow really faster. Apart from that, it's usual stuff where India needs to get lucky. For example, monsoons have to be good, and programs like skilling Indian people and education has to do well. So we are hoping that that everybody will see the logic in that, and continue to move the country in the right direction.
Ashish, extending that argument with you, and as was rightly mentioned, that capital seeks the best return on a risk-adjusted basis. We know the opportunity. What worries you? What are the macros that you're watching out for, and what are the pitfalls potentially that one should be wary of?
Yeah, I think we personally believe that there is opportunity in every sector. The reason being that either you are playing, so you have to seek the right risk-adjusted pricing for the capital, and you have to have the right type of capital in order to take advantage of every opportunity. And throughout the cycles, that's what we're seeing. What we are seeing is that this time the diversification in capital is a lot better compared to what it was in 10 years ago. 10 years ago, everybody was looking at opportunistic capital and opportunistic returns. Today, you have broadly capital in the market that's in 4 buckets. There is the opportunistic capital, which has been less in the last few years. There is the long-term sort of capital suited for longer-term opportunities, and it's clear that a lot of the investments could not exit earlier because the shorter-term capital was deployed in longer-term opportunities from execution and monetization perspective. And then there's the direct capital that's coming into assets, longer-term sort of core or core plus sort of capital, and then there is also capital that is that some of the LPs are exercising more and more control, which is through separately managed accounts, etc. I personally feel that there is opportunity in residential, there's opportunity in office, there's opportunity in warehousing, there's opportunity in industrial, there's also opportunity in hospitality sector for the right kind of skill set and right kind of capital, and at the right kind of pricing. The risk, as Nipun pointed out clearly, has gone up. So the risk perception has gone up. There is some negativity still about Indian real estate in the global context from capital raising perspective. And that's mainly because of the impact of what's happened in the last cycle and some of the exits that have taken too long to happen or still to happen. But there is a lot of feeling among the LPs community that they are willing to look at the Indian market again, and they need to be convinced more and more. So for the dollar-denominated investor, I would say perhaps the currency depreciation is one of the biggest sort of factors that comes quite negatively sometimes. And oil is, like Nipun rightly pointed out, oil is really behind the currency thing. So perhaps there has to be a longer-term solution found to that, part of energy security, diversification of energy pool, et cetera, et cetera. I'm sure the government is working on that. But in the meantime, that somehow increases the risk premium that the capital will seek in the investment opportunities. So whether that risk premium is available in the market, in the opportunities or not is really the question. And hopefully, from residential segment perspective, I think the market has to really improve to deliver those kinds of returns. And hopefully, if the cycle is right, that could be an interesting opportunity.
Thank you, and it's very interesting because we are joined obviously by the economic advisor to the Housing Ministry, and this platform aims to consolidate these views and present it to the right fora. Because, as you rightly pointed out, it's not just about policies, it's not just about housing, but it's also about the impact of macro factors, whether it's currency or interest rates, which will also have an impact on the pricing of capital and the availability thereof in our development story. Shifting gears a little, coming to you, Vinamra. We know historically that housing forms 75% of the real estate development and potential in this country. However, we also saw a slide from KPMG that 80% of the capital last year went into commercial real estate. You are also fronting one of the largest commercial real estate developments and acquisitions. Is there a mismatch in terms of demand and build out? And what is it that commercial real estate has to offer on a long-term perspective within the spectrum from a capital allocation perspective? Is there enough capital that can continue to go into commercial real estate, given that we've seen a compression of yields already, given that we've seen there's an overbuild already happening in some markets like Hyderabad? Where is the story panning out for commercial real estate, and what is the opportunity set that you see for yourself?
I think there's a bit of a silver lining to all the challenges that we talked about. Certainly, what does keep me awake at night is the currency depreciation for now, because that directly impacts not only your dollar returns, which is most of us on the dais are looking at that, and at the same time directly impacts your business because inflation is impacting your input costs, etc. But the silver lining is in the fact that this is actually a time for a bit of a self-correction for the market, especially at a time when we're talking about REIT listing as well, right? And if the cap rates for commercial assets keep going the way they were and keep touching 7.5, 7 now in the future, that's unsustainable, especially when you're talking about listing a REIT. And if you're looking at an international investor, why would he come and invest in a REIT here, where after removing all the taxes and leakages, you're going to be talking about 5 to 6% rupee return, where he can get the same in dollar return in other REIT markets. So therefore, what all of this will eventually do, at least in the next 12 to 18 months, is provide a sanity check to where the cap rates are going. And in my view, valuations will stabilize a bit and become a bit more realistic. And that's healthy for the market. So that's on the yields and compression. On where the foreign capital and how it is chasing commercial asset, I think it's also quite logical in the past where foreign investors found much more comfort in chasing portfolios and assets which were more institutionalized, which were run more professionally, where the customers were more multinational tenants, and there was a similarity in the way people thought about the asset class. And at the same time came with much lesser risk, which comes if you directly deal with the residential sector, right? So it's completely different products. And as it was being mentioned earlier, do you have the right capital for the right product? And the question is really about that. So I don't think the challenge is more about why isn't foreign capital chasing resi as much as it is chasing commercial. I think these are products with very different characteristics, and therefore they require different capital. What is more important is that whether it is the foreign capital or domestic capital, are the fundamentals of that sector strong? And that's important. Once we take care of the fundamentals of resi and the fundamentals of commercial through regulations, through infra, through addressing the basics, then automatically the market will adjust itself. And if the foreign capital feels that the resi sector is at a level of maturity where they are comfortable, it will automatically chase that. So that will take care of itself. For us, the focus is more on addressing the basics right. And that is why I think the challenge of the next 12 to 18 months is very real. But at the same time, rupee has been depreciating for the last 20 years, roughly 3 to 4 to 5% per annum. So investors hedge, investors price that risk in. And in the long term, I think that's good for the industry, because it's going to make sure that pricing remain at a level where the result is sustainable. Otherwise, we are all going to see what we all know happened in the 2008-2009 era.
Dr. Hiranandani, extending that question to you. Dr. Hiranandani, you have been an equally large commercial developer as you've been a residential developer. And as we presented that commercial has seen more interest from global investors, but the demand for housing is real. where do you think really the market lies from a developer's perspective, from an outlook? What outlook do you share? Do you think there are better opportunities in residential or commercial or warehousing or some of the newer asset classes that you're envisaging within your own group as well?
There are two aspects which I'd like to touch. The first aspect is I think there is a correction that we need to do in the housing policy of the country. We talk about housing for all. Even the richest country in the world, the United States, at least 50% of the people live in rental housing. The whole concept in terms of what we want to deliver in India, even in terms of housing, is considered to be a house which is ownership. Hence, all the benefits which are now given by the government of India in the finance ministry, in the budget, in all these ideas have been focused mainly on housing which is sold to the buyer. I think that change is required. If that change takes place, then I think the residential growth story is going to be 100 times bigger than commercial. But if this policy does not change, then the focus on commercial will be always more healthy because the commercial people are really looking at the rental markets and people who want to get into the commercial field are more comfortable. Today, I think with nuclear families having place and mobility taking place in the country, a time has come where the emphasis should shift also to rental housing. If and when that takes place in a substantial sort of way in terms of policy changes, both in the budget as well as in the case of policy in terms of housing for all, I think that's where the change will have to take place and it will percolate right up to the lowest level, which means that housing societies will not differentiate too much in terms of charges for non-ownership not being there but rental being done. All these changes have taken place in the commercial area. And hence, commercial leasing has become a preferred option. I can assure you, if we move towards that direction, the next 4 years or 5 years, the residential market is going to super boom because the growth story is definitely there, but we don't have the rental component as strong a matter. So I believe that the policy makers will have to look at that change if you really want to have a bigger story investments. As far as the second part of the thing is, which is the investment into the residential space, I think it's happening. But the growth is not taking place because the commercial is looking far more attractive in terms of what it is, because they are all concentrated at the top end, whether in A-grade cities, B-grade top end of the cities, they're not actually moved down the chain. So the volume in the residential space is so much larger. So if all these people sitting over here want to grow not 10%, 20%, 50%, but if they want to grow 100% compounded every year, they will have to move to the residential market because that's where the growth story is. So we have to actually work towards NAREDCO or Government of India. We will have to work out to make a growth story in terms of rental model as strong as the commercial model, and then sell to all the investors sitting over here that the residential rental market is also equally strong as the commercial market is. I think the fault lies with us in terms of policy changes that we really need to do. Then they will come along because once they find that the opportunity is there, I think the international capital market is hungry for India. But if we don't have a strong story to tell in the residential market, and we are only looking at the sale market, I think the volume will definitely continue to grow more in the commercial than residential, though the reverse should be the correct way to go about.
Dave, coming to you, and moving again to the housing sector, which I mentioned is about 70-75% of the market, and you focusing on the residential sector. However, we've seen that almost 85 or 90% of the capital has only gone into the tier 1 cities or the metro locations. Also, we heard about the advent of smart cities, and now 100 smart cities are being formed with billions of dollars being employed, and clearly with multiple programs, job opportunities being created there. When do you think global capital will find its feet in the non-metro locations, the tier 2 cities, where there's enough growth as well, where there are enough job opportunity creations, where enough business parks are also getting created? Where does that opportunity lie for global capital?
From a global capital perspective, Amit, I think tier 2, tier 3 cities are some distance away. Investors are still finding their feet and trying to hunt for returns in tier 1. It's coming from 2 or 3 factors. One, I think the biggest challenge in the smaller cities is finding the right counterparty, which is the first step in the investment process. And if we went to a Kochi or a Nagpur or a Nasik, I think from a foreign capital perspective, and if you want to do scale, it's very difficult to find a counterparty where you can put out $200 million for a residential development, just simply in terms of institutionalized counterparties. And two, I think investors in the past cycle, have burned their fingers on 2 accounts. One, a bunch of them went and got into smaller cities without fully understanding the dynamics of those cities. B, I think they got the mix wrong and entered into large townships and really large developments which couldn't be completed and or sold over a 5-6 year period. And having burned their fingers the last time, I think it's a while before people get comfortable with moving from the top 6 or 7 obvious suspects in terms of markets.
Okay, so I mean, clearly, I think one of the highlights here is that there is opportunity in every asset class which is now emerging. There is more smartness, there is more know-how, there's more learning involved. So what does it mean for you, Nipun? Are you looking at now a portfolio of assets to invest across, or will you continue to stick to 1 or 2 core asset strategies going forward?
I think, there is all kinds of capital. There is separate capital for commercial office. Maybe residential is on the debt side. But if you see, investors can basically invest in 5 different ways in real estate. You can give an equity to a developer, you can give debt, you can finance the ecosystem and buy the apartments or land side, or you could finance the consumer, which is on the mortgage side, or you could be the NBFC side. And ironically, what has happened is that while the asset class has not given returns on the residential side, but the NBFCs who built their whole business based on the real estate model of lending to consumers have created massive value. The value creation done by the financial service sector, whereas real estate market cap has collectively been destroyed by about $15 billion, the collective market cap by financing the home loan buyers has increased by about $80 billion. So it's the same underlying asset class, but you played it through the mortgage route and you kind of created. That's the value creation in the market cap, maybe got impacted by 10-15% last few days. That's change for that kind of value creation which happened over the last 5 to 8 years. But on this side, I think on real estate side, it's how you kind of playing it. And it seems that in India, if you are playing it through the credit route, that's where value creation has happened much greater than playing it through the asset class route. So I think that trend I don't see changing for now. I think large international investors will continue to focus through the financial service route indirectly into real estate than directly into real estate. As far as I think real estate is concerned, the theme of consolidation at one side and distress on the other, I think they keep playing out, and we'll be partnering with, I think, several players like we've been doing in the past to kind of pick our spots. It's clearly a tier 1 opportunity for the large players because I think transaction values tend to be larger in the larger cities. And I think that's what will kind of drive the consolidation and resolution of a lot of the distress situation.
So coming to you, Vishal, I mean, there is one big chunk of capital which is on the credit side, but we've also seen an equal emergence of capital on the greenfield side, on the long-term strategy side. Where do you think that will even out? Do you think there'll be enough risk capital coming into across these asset classes, given the renewed interest across these asset classes? And how do you see capital formation over the next 4-5 years?
Well, on the greenfield side, I think it's still tough days, especially for residential. I still see margins either stagnating or going down, and mostly investors are aware of that. So I don't think, I mean, you'll see a few deals, but I don't think that's like going to change into like a big wall of capital. I think commercial and retail, and to some extent warehousing, will continue to see interest from capital, because especially capital which expects lower returns, but it's okay but wants much lower risk. Development of commercial and retail, I think yes, you will see some interest, but almost everybody knows that that sector is getting overbuilt as we speak. And so there you'll see some sanity check coming in maybe a couple of years from now. A lot of the people are looking at opportunities from the dislocation as we spoke, as almost everybody has spoke, and I think you'll see a big theme emerging to take care of the distress situations, whether it is developers or whether it is capital providers, and I think that's probably going to be a big inflow of that is going to be probably in the immediate term, and then we'll see from there. But at the end of the day, capital wants returns, right? That's the only thing we want. We are looking for. We see how much risk we take, how much return we make, and capital is going to move from sectors where it does not see much return to sectors or to classes where it sees return. And as the market moves along, you'll see capital shifting along with it. So from a very high level perspective, all I can say is that people are looking at India with a lot of interest, but they're also aware of all the risks and the returns involved in various business models and various asset classes. And of course the execution challenges. They know that they need to find good partners and they need to pick the best assets or the better assets. And the market is changing and capital is going to change. So rest assured that capital providers will probably be the smartest player in the room. And they will always be the first to move to the right asset class.
Dr. Hiranandani, I think you've laid out the opportunity set for our conclave today. What is your expectation? We have global investors also in attendance. What expectations do you think they must come in with when they bring their capital and their hopes to partner with the sector and its growth story in India? What expectations should they have?
The story is very simple. There is a huge growth story. Wherever there is a growth story, there is an opportunity. I think they have defined the downside risks which are there. And I guess any person who's an investor into any of the sectors, especially because they are very large investors, will take account into the risk portfolio that they are really investing into it and actually adjust for that. But having said that, I don't see the kind of risks we saw in 2006 and 8 investment to come back again, because the markets have actually changed so dramatically, and the amount of availability of data and information today which is there, and the transparency which has been created, risk assessment is much more easier today than it was that time. That time you were looking at huge land banks and saying the multiplier effect of valuations in those days. I don't think that's the perspective with which anybody is looking at any project in India today. You are really looking at the ROIs, you are looking at the projects, you are looking at the approvals, you're looking at the kind of a person who's there for execution capacity. So I think the risk portfolio that they are seeing today is quite mitigated, qua 2006-8 scenario. Having said that, the second part of it is extremely important. The growth story has to be sold in a proper manner, because we want to show them that the opportunity is far more broader than what they are seeing today. That is what we need to sell to the investors, that India has a better story than what they are looking at in terms of the growth opportunities of affordable housing, those segments where the margins are definitely smaller, but the volume availability is better. So if they marry with a person who has got execution capacities in these states, there's going to be a larger amount of opportunity coming, which is going to be, as he said correctly, a different type of investor looking at, or different capital, as he mentioned, looking at different types of investment. But the growth in terms of investment requirement is going to grow. We need all the investments that is possible to do, whether it is infrastructure, whether it is housing and real estate, or any of the sectors of the economy. And I think India is a good country to invest. That's what we wanted to say.
Thank you very much, sir. I think we've been able to cover a plethora of subjects today, whether it is the interest in housing, the growth of commercial real estate, and global capital having chased that massively all of last year, to now the renewed interest, whether it is warehousing, co-working, to potentially rental accommodation, which, as Dr. Hiranandani pointed out, needs more policy work for that opportunity set to blossom. Clearly, there is no dearth of capital, but it is only backing the right developer, the right partner, and obviously for a longer horizon rather than an opportunistic short-term duration. Having said that, there are challenges that need to be kept in mind, which could be macroeconomic or economic in nature. Today, what we've really come to, and starting from Rohit, who mentioned that the opportunity in affordable housing is real, and I think Rohit, you mentioned Poddar housing is chasing that opportunity. He said, given that LPs have shown interest, they have put in capital, and given RERA and technology both playing together, there is an opportunity to actually build more, deliver more, and more consumption, therefore, on the horizon. Ashish, you've mentioned that there is stability today in the regulatory framework. There is more hope because there's greater demand and more real demand that can be surfaced, both on the office as well as on the residential side. The markets are wiser, investors are wiser, and deeper markets are allowing investors to actually come and put their capital into play. You've also said that diversification is a good thing, and people are therefore diversifying their portfolios. However, there remains a risk of currency or capital cost in the short term. Vinamra, you've mentioned that clearly there is capital for specific purposes, and commercial real estate has clearly shown that opportunity for global capital with the inadvertent REIT, which will obviously be potentially hitting the market. I think there's a huge opportunity, which was further supplemented by Dr. Hiranandani, that commercial real estate still forms a very core in investment strategy for global investors, and will continue to do so in the near future. Dave, from a residential perspective, clearly the demographics, the growth story, the policy changes, and the ease of doing business have allowed the significant players to consolidate demand towards themselves as well as capital, and which is what you believe will continue to be a tier one and a large developer story. Dr. Hiranandani clearly mentioned that it is good to be a contrarian. We may have missed the bus on a few things, but there is still opportunity on the rental housing side. The markets are more real. ROI is real. Fancy days of heyday valuations and unreal expectations are out of the window. Everybody's coming more smarter with their eyes open, and that is the real opportunity for India over the next decade or so. Vishal clearly mentioned that dislocation and the disruption that is happening, clearly also led by consolidation in the favor of large developers, is a very, very real opportunity. That is something that global investors are eyeing very keenly and putting capital to work in consolidating the markets, in working with that dislocation and working with the macros and the story that is coming through, especially because of the demographics and because of the down cycle having played out now. It's only an upside which can be viewed over the medium term. Nipun mentioned about being wary about the industry not being clipped, C being for currency, L being for liquidity, I being for interest, and P being for politics, a deadly combination of clip. There is wings that the industry has. It is finding new wings. It is a re-emerging, but it needs to ensure that its wings are not clipped. There is a big play available for people. There is a new life cycle which will happen in the form of consolidation, and we will see a re-emergence of the sector, albeit cautiously because of macro factors which may disrupt the story, which global investors are already factoring while coming into the market. So thank you, gentlemen. I think it's been a very, very interesting discussion. I think the theme, as aptly put, the renewed investment frontier, still stands out starkly. We were mentioned that where housing is a real opportunity, as Dr. Hiranandani mentioned, is rental housing and co-working. We've seen co-working expand very rapidly in the last 1 year. We've seen commercial real estate benefit out of that. We've seen affordable housing developers like Rohit and Poddar Housing expand their footprint very, very rapidly and make PMAY, working towards PMAY and making into a reality. So thank you, gentlemen, for your time. It's been very, very invigorating, very, very insightful. I'm sure the audience has loved the session. We don't have much time to take questions, but I'm sure we will find time offline to take questions. You will find some time offline to take questions from the audience. Thank you.
Thank you, Mr. Goenka, the Governor. Wow, that was a perfect specimen of chamomile tea, a calm, composed, and a productive discussion. We have a special felicitation going out to all these lovely stalwarts who've joined us and made this session more enterprising and engaging. So firstly, may I invite Mr. Namal Atla to please come on the dais, the CEO of Pyramid Realty, and felicitate Dr. Niranjan Hiranandani, the chairperson of this fantastic session. Can we have a huge round of applause, ladies and gentlemen? Fantastic. Thank you so much. And now I'd like to invite on the dais Mr. Gaurav Jain, VP, NAREDCO National, to felicitate Mr. Nipun, Sahni, please. I now request Mr. Builder Extraordinaire Dr. Niranjan Hiranandani to felicitate Mr. Dev Santani, please. I'd now like to invite Mr. Rajesh Doshi from Acme Housing to felicitate Mr. Ashish Singh, please. Calling on Mr. Kashinath Shukla from Tashi Group to please come on the dais and felicitate Mr. Vinamra Srivastava. And a huge round of applause, ladies and gentlemen, would be appreciated. Thank you. Calling on Mr. Chalapati Rao, the VP, NAREDCO National, to kindly come on the dais and felicitate Mr. Vishal Kumar, please. And finally, may I request the Governor himself, Mr. Amit Goenka, to felicitate Mr. Rohit Poddar, please. Wow, so thank you so much, all the lovely panelists on the dais. It's been an absolute pleasure having you amongst us. Thank you so much. Yes, can we have a huge round of applause, ladies and gentlemen? All right, and do not go anywhere because the next gentleman coming on stage is a visionary in the true sense of the word. And you do not want to miss his words of wisdom and, of course, his sharing of knowledge. So, ladies and gentlemen, I'd like to invite on the dais for a very, very special keynote address. But yes, right after this photograph. All right, thank you so much.